XRP has been in a bit of a freefall since the SEC's appeal yesterday. We've seen some pretty interesting structures appearing from a technical analysis standpoint, so I'm going to spend a little bit of time with you guys today just sharing my thoughts and opinions as to where I think the price action is heading next. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe, and let's take a look at what's going on here with XRP. So this is XRP paired up with USDT. We're on the 1 hour Binance chart here. So obviously we were in the previous videos talking about how we did reach the lower side of our expectations with the fifth wave movements all being up here, which complete out a C wave structure on a slightly larger scale, which we'll probably take a look at that on the slightly larger daily time frame in a moment. But you can see here that we were tracking the idea of this descending wedge, a little bit of a bullish pattern. We saw a little rally, and then of course we start to see the collapse. This is quite a big move to the downside. So on Tuesday at 1700 hours, we did see this little move down here. A little bit of a bounce up above the 200 EMA up towards the 50 EMA 50 SMA, obviously a lower low and there, sorry, a lower high here, and then obviously rejection. Now what's really interesting is all of this pattern is forming out a large impulsive breakdown structure. So I'm going to go show you what that looks like and why this is super bearish for XRP in this kind of next probably little while actually. And it kind of goes back to what I was talking about a few weeks ago with the idea of retesting out the 50-cent levels and maybe even losing them as support. So here you can see that we have come down very aggressively here. Okay, so as I measured this distance from the swing high that we had on the 29th of September, 1500 UTC, down to the swing low that we had on the 1st of October at 1700 UTC, that bounce to the upside is where I've then basically moved the Fibonacci retracement tool to. So in essence, what we've done is we've measured the entire distance here, okay, and then we've just moved the fib to the top of that swing high. This is important because it allows us to measure how this latest move is in relation to this previous move. Okay, that's essentially what I'm doing. Now, from here, we can see what's really interesting, at least to me, is the diagonal pattern 1, 2, 3, 4, 5 here. Okay, and this would be under the premise of an expanding diagonal structure. So 3, 3, 3, 3, 3, all the way through there. And if we go ahead and measure, well, if I draw the trend lines in, make it really quite easy to see. For anyone who is unfamiliar with Elliott wave theory, you can see how it expands out. Some people call this a megaphone pattern. I just call it an expanding diagonal, as that is what I would know it as through Elliott wave theory. So you can see the expanding diagonal, the bounce, the relief rally to the upside, and then the collapse to the downside. Now, what's really important is obviously our minimum expectations are going to be an ABC structure, which would be 5 waves down, 3 waves up, 5 waves down. And so we're looking for 5 waves to the downside here. Okay, now what's really interesting about this is it doesn't look like we're done just yet, and the main concern is going to be 50.05 cents. Okay, and I'm just going to go ahead and make sure that number is accurate by checking that swing high that was on the 1st of October at 1900 hours. That swing high was 62.74. So I'm just going to go ahead and adjust our fibs until we get to that level right there. So it's actually 49.99, so basically just short of 50 cent. Lose 50 cent, we've got ourselves a problem essentially. Now taking a look at this structure, we can see that there's a move here, here, and then we still got to have that. Okay, now what's really interesting about this is the sub counts internally here and what's going on. So you can see here there's a 5-wave move, a bounce, and then a move down here, also containing 5-wave moves there. So this move it looks like we're kind of in the wave 3, not that we've actually started wave 4 in my opinion. Let me go ahead and break this down so you guys can see. We have the 1, the 2, the 3, 4, and 5 here. Okay, this is then basically going to be our wave 1, our wave 2, our wave 3, up for this little wave 4 down into the wave 5, and then all of that is going to then get built up into the wave 1, the wave 2, all of that's the wave 3, up 4 and down 5. So you can see there's a high probability here of going down lower than 49.9. Okay, and obviously this is kind of counter to what I was talking about the other day, because we had that break of that swing high, right? It was a higher high on the daily time frame, but fundamental news has basically just completely spooked the market, and as such the sentiment that we were tracking changed. Now we finished that 5th wave move to the upside, we were tracking a move to the downside. Okay, but this is just a part of a C wave. That C wave could have gone higher, but it hasn't done so. And so instead, sentiment shifted, sentiment changed, and we saw this break to the downside. And it's come a lot more aggressively than maybe we would have been tracking had it not been for what the SEC just did. But taking a look at this, we can see we are in a pretty bearish place for XRP. Now, there's some positive stuff because we will be looking for bigger moves to the upside in due course. So let's go ahead and take a look at our trading opportunities to start with. So it's possible that we can continue to move up just a little base here before we have another wobble in the market and another move to the downside. But I'm going to use these wicks that we currently have to give us an estimated target on the next kind of move. So we are going to be looking, in my opinion, for 51.05 to 51.83 initially. That's going to be our first kind of target. If we hit that, then we'll look for a typical move to the upside of around 38.2%. So I'm going to go ahead and take the conservative target ranges here and put them up there and set out the next target, which would be set at that kind of 38.2 up towards the 50. So I'm going to go ahead and draw that in, and it is a little hard to see, but it's right there. So I'm going to go ahead and then just remove the fibs so we don't clutter up everything going on. So here you can see how we have our next target. So we have this one, and then that's basically going to be measuring our fourth wave movement. Again, I'll take those conservative targets and then kind of look for that kind of final wave 3 kind of low point, which is okay, a little bit preemptive. Of course, these will be refined a little bit further down the line, but here you can see what we're talking about. We're talking about the idea of moving down and then getting a bounce to the upside, and then from that bounce to the upside, we're looking for a move to the downside. Okay, so essentially we're still looking for these moves to the downside and this volatility to continue. Essentially, all of this is going to be a wave 3. So we have that diagonal, right? We have the 1, the 2, all of this is going to be the 3, the 4, then we have the 5. So you can still see that we work our way down towards probably 46 cents. And it's going to be interesting to see whether that plays out like that or whether or not the market is going to change. Now, for our kind of key levels here, we're going to be looking at a few different things for the bulls, right? So if we want to break out of this bearish structure, we need to first of all see a rally higher than 58.83 cents. Okay, 58.83 cents is going to basically break this move down here, right? So that initial kind of structure. Outside of that, it actually does lower our target. So if we complete the wave 3, the bounce to the upside afterwards, so i.e. we do have this move down here towards 49 cents. If we do that and then bounce up and we cross 57.78, then we can break that bigger bearish structure. But there's a few points of reference here to kind of keep in mind. For the most part, we're going to be looking for a rally above 58.83 to really kind of get out of this bearish pattern that we're in at the moment. You can also see here that there's a death cross as well on the 1 hour time frame, the 50 SMA going down lower than the 200 EMA. But for the now, the trading opportunity looks like what we want to do is to go short. Tight stop loss, target out the higher range here, look for 1.5 on the risk reward ratio, so we can do something to this effect right inside here. Okay, and then of course we'll be looking for long positions from the low side, again tight stop loss, and target out 1.5 on the risk reward ratio, again on the lower side of the expectations here probably, and to make sure that we kind of hit those levels like so. And then of course once we hit those upper areas, we're going to be looking for tight stop losses again where possible, but this one's going to be a little bit tougher because you're going to want to make sure we actually get a good entry on that one. And then of course targeting down here around that kind of 49-50 cent level. Of course we'll look for the 1.5 risk reward ratio where possible, so again you're going to have to mess around with these key areas and see whether they are viable or not. But you can see here we're going to be expecting a lot of volatility on XRP. So these are the ideas that I have running through my mind at the moment, essentially short, long, short, and we can kind of take advantage of those market swings as we see them. I expect that we're going to see a lot more volatility as markets kind of respond to some of the news that's going on, some overreactions in places, some relief rallies in places, some more selling pressure in places, but essentially the bearish breakdown is here and we want to be very much aware of it. And speaking of trading, we've got some fantastic offers and exclusive bonuses for the cheeky crypto community courtesy of the Blowfin exchange. As you can kind of see here, the whale campaign 2.0 is now in full swing. So on top of the usual kind of benefits that you get of getting up to $10,000 of deposit and trade rewards depending on how much you deposit and obviously trade on the platform, they're also now giving you the opportunity to get your hands on a Model 3. There are several different prizes up for grabs from Blowfin just for signing up using the link in the description down below and trading and basically depositing and trading on the platform. It's quite straightforward, so if you're a trader, this is a fantastic opportunity not to be missed out on. As you can kind of see here, we have the Apple Watch SE. This is for trading volume above 3 million. million, which sounds a lot more, or sounds a lot more difficult than it actually is. The volume is 𝗕𝗘𝗪𝗀𝗃, which is only considered. The rewards will be sent within 2 days after the end of the event. Prizes will be distributed in equivalent USDT after the event ends. Each user can only get the reward once based on the highest trading volume during the activity period. 10% cashback, the amount transferred into the futures account minus the amount transferred out of the futures account, obviously 10% of that. And you have the bonuses as well on there. So some fantastic things. As you can kind of see here, as we go up to 15 million in trading volume, you get the Herman Miller chair. You then obviously get a camera here, the Canon EOS R5 at 25 million volume. 50 million will get you a travel fund of $5,000. If you're into your bikes, a Kawasaki Ninja 650. This is for a trading volume above 100 million, and of course the Tesla Model 3 with 300 million in trading volume. So this is a fantastic opportunity to take advantage of everything that this has to offer. So this runs until October the 4th. Why don't you go ahead and check the link in the description down below and sign up to Blowfin and start actively trading and start bagging yourself some of these fantastic deals. Okay, let's roll this up into a daily time frame. This is where things really get interesting. So as I was saying, right, we had the possibility of this C wave to rally up higher. Now, technically it still can, but the bearish pattern that we've been witnessing on our 1 hour time frame is telling us that actually our minimum expectations were met right here by breaching this with a double top situation, which is always the minimum expectations with these ABC structures. And for the most part, it's actually more of a WXY, by the way, but I'll call it WXY because technically that's correct. ABC would not be correct here. I like to use ABC to prevent confusion, but it is what it is. This is why I put together the Elliott Wave Theory course over at Cheeky School, by the way, guys, because it can be very complicated. I tried to keep the videos as simple as I can, but if you are interested, go check out the link in the description for the Cheeky School. I put the course together with a 50% discount linked in the description below. If you want to learn Elliott Wave Theory, check it out. So here we can see we are lower than the 200 EMA on the daily time frame. So big breakdown here. If we lose the swing low that we had down here on the 6th of September, that swing low being 50.26, if we lose that, then yeah, we are completely done with that Y wave high there. Okay, if of course we keep above this level, then we can hold hope that maybe we can get back up into that range for that breakout towards the 85-75 cents levels. However, with the close below the 200 EMA yesterday, this is not a strong place for XRP to be in. Now that 200 EMA is sat at 55.58 cents, and that is going to be our resistance now. We've lost it, so a retest of this area may be something to be expecting in the coming days. Okay, so obviously we still look for those patterns to play out on the 1 hour time frame, but a retest and rejection from the 200 EMA could be another fantastic shorting opportunity. Stop loss nice and tight, of course, and we'll target out those lower ranges. Well, I suspect we are likely to see, like I said, 46 cent or around that range, which is something that we were talking about a little while ago, because you guys know that we haven't really broken out of this bearish structure just yet. True breakouts happen at 75 cents. We've had a good run to the upside here, but we are still looking for further decline into this Y wave. Okay, and the news around the SEC appeal has basically just given everybody the reason to kind of see this come to fruition, right? I often talk about this on the Bitcoin videos. Essentially, the market was overheated and it needed an excuse to sell. And we've been seeing that across various different fundamental reasons, news reasons, geopolitical reasons, US election reasons. Essentially, the market was warming up, it was overheating, and the traders were just looking for an excuse. And yesterday we saw the traders had an excuse, a valid excuse to kind of come out of their positions. And so that's what you've seen. This big break to the downside is not necessarily unexpected. Obviously, with the breach that we had above that previous level, which was on the 29th, coming in at 66.49, was giving us confidence in that Y wave push towards 75 cents, but it just hasn't played out. This breakdown at the moment is looking pretty bearish. Of course, we're going to be looking for confirmed breakdowns by coming down lower than that previous swing low of the 6th of September, which would be 50.26. Anything lower than that, we're going to confirm it. But I think our structures on the 1 hour time frame are looking very bearish to kind of indicate that we are likely to see further slippage to the downside. So it does look like everything everything's playing out in the same way that we didn't know how we were going to get up to that 93.8 cent. We were predicting it for a very long time. We saw, the court ruling back then in June of 2023 that got us up there. But it was a target that we had in the same way that we've been having these kind of target ranges here for XRP for a while. We don't know how we were going to get there, but obviously with the SEC appeal, that's going to be fueling a lot of concerns and issues that I think is going to mount up that selling pressure. Of course, our real accumulative range, and I want to use that word accumulative because that is where I think most value is basically in the range between 46.16 and 33.46. So that remains very much where we have tapped into before multiple times. A retest of this would be a fantastic opportunity for dollar cost averaging in my opinion, and for building out those positions, because regardless of all of that, I'm still bullish on the bigger macro piece. Even though we're seeing some volatility, this just gives me the same kind of vibes as what we saw in December of 2020 when the lawsuit was initially dropped. The knee-jerk reactions initially, some fantastic buying opportunities that you can take advantage of if you want to, and of course, from there, we see the bullish market of 2025. So obviously, I'm no financial advisor. I can't give financial advice. All I can do is share my thoughts and opinions on the data in the charts as I personally see it. And to me, we do see a little bit more room to the downside, unfortunately, for XRP before we get into those bigger breaks to the upside. But I'm still bullish on the long term and on the bigger picture. We are just experiencing some more volatility. But what do you think? Let me know in the comments down below, or join us in our free Discord server. We'd love to hear from you. And guys, if you haven't already done so, check out this video right here. It's not one you're going to want to miss.